Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of October the 29th, 2018. Now, to get started this week, we're going to begin where we always do with the US dollar index. Now, with the dollar index, our main event risk this week is the non-farm payroll number. As I've said in many cases, regardless of that number, the dollar usually weakens at the end of the first week of the new month, which actually happens to be next week. So, along with that, the dollar is approaching a long-term swing high. This is up to which has been identified by our verified resistance zones. That's coming in at or about the 96.50 area. A little bit of additional resistance up there, but in my respectful opinion, the dollar is unlikely to break above the 98.50 level, and it's more likely than not the dollar could be exhausted where it is now, and we could start moving into a longer term bear market on the dollar. Now, nothing is 100% here, guys, but usually with these bigger swings like this in the market, we make a slightly new high and then we see a significant retracement, which of course has absolutely nothing to do with Elliott wave, Fibonacci, or any of this nonsense. When we look at this, guys, we have buyers and we have sellers. When we run out of buyers, the sellers take over, and vice versa. So when we're at a significant yearly top here, the probability of a reversal is very, very high. When we look at our medium term crossing our long-term predicted difference, once our neural index turns down, that should give us the green light to start selling, not buying US dollars, believe it or not. Now, I am of the opinion the dollar will continue to hold its ground up until Friday of this coming week. Once we get past the non-farm payroll number, I'm not really anticipating a great number, just an okay number. But even if we get a blowout fantastic number, the dollar is ultimately likely to sell off. That's what we've seen in price action after every time we get this announcement, the dollar weakens at that time. So that may breathe some life into the equity markets. Now, when we look at the equity markets here again, once again this week, I'm doing things a little bit different. You can see that I don't actually have a crossover on the screen. I'm using solely the VantagePoint long-term crossover, but just the predicted moving average to help simplify our trading. Our upside pivot here is 27.13. If we look at the market, how it responds to this blue line, like a moth to a flame, it keeps coming back to it. Now, the equities absolutely got decimated last week. A corrective move was long overdue, but I don't think the equities are going to just crash and burn here. I think that we're likely going to see them recover as we start to move into November. But for now, right now, indisputably, the equity markets are bearish while below 27.13. Now, if we can start pushing back up above the VantagePoint long predicted, the blue line, and again, bringing the black line back into the equation is very simple, and you can see it's down. But as the market moves over that blue line, that usually tells us the market is potentially getting ready to reverse. So keep a close eye on that this week. Now, with gold is a major player, and the market has simply been unable to break through these verified resistance zones. You can see an absolute wall of resistance, but the main resistance point here that's been the problem area is, once again, it's coming in at or around this 1244 area. The market repeatedly failing into this particular area of these verified zones. Now, our current verified zone all stacking up around 1243, but as you can see, like a moth to a flame, the market is coming back to the long predicted. That predicted moving average should be our focus, not just the crossover, guys. The blue line tells us everything we need to see. We use the black line crossing the blue line as confirmation after the fact, and we can use that for additional entry points, but the blue line is very important. Now, when I look at gold, contracts based on the commitment of traders are increasing, and this does not surprise me. You can see that our verified support zones from VantagePoint are starting to push higher. We're getting a short squeeze between 1220 and 1245, and a break of either one of these two levels will see a more significant move. Now, that's one of just yet another advantage of using these new indicators from VantagePoint, the verified support and resistance zones. Once again, we've got to break free and clear of them for the market to start to move here. Now, as oil relates to our trading here, we're also coming into a good, strong, verified support zone here too. So when we look at this right now, the long predicted 69.44 is containing the top side, and on the downside, the lower part of this verified zone at 65.74 is controlling that. So once again, our focus on this to simplify our trading and to simplify the use of the VantagePoint software, we take that black line out and focus on this blue line. Now, we also want to use our triple EMA cross, all of those pivot areas also again, very important indicators, but just a slightly different play here we're looking at this week. So when I look at light sweet crude oil, medium term crossing the long predicted, we're measuring two trends against each other, the medium term trend against the long term trend. When they cross and the neural index is supportive, we've got support from the RSI. And actually, contracts are to some degree increasing on light sweet crude oil. So slight bias to the upside, but we need those equity markets recovering. Now, as we come into our main Forex pairs this week, the euro, believe it or not here, guys, we could be looking at the end of this coming week some very potentially good longs on euro US, not shorts. Now, we've got a long-term downside pivot area, 1302. We were approaching that area on Friday, and basically, as soon as we got anywhere near the bottom end of this zone, the buyers stepped in. Now, what's containing the top side, once again, to illustrate this, using just the blue line by itself, it's hitting into this 114.26 area to the number. Again, like a moth to a flame, the market keeps coming back to this area. I believe only at times that the long-term crossover can cause some traders confusion. So if we remove that and look only at this blue line, we get all the information we need when we're combining the initial indicators. So already, guys, the medium term is crossing the long predicted to the upside. When the neural index goes from red to green, that will give us additional confirmation of a reversal. I'm not anticipating a full-blown reversal for at least another few days, maybe even a week and a half. But the fact is it's coming, guys, and that's the key thing. Even if we look at our RSI and we start using some confirmation bias there by putting a trend line in the RSI here, a few of the traders like to do that. I'm not opposed to that. I think you're better off with that than in some silly Elliott wave or Fibonacci. I think this can tell us a lot, and when we combine it with the medium-term predicted differences and these zones, we get a winning trade here. And again, looking at these major swing points that we also come back to, very, very effective. Now, when we look at US Swiss franc, the additional trade, Euro US goes up, US Swiss franc goes down. Right now, the market is clinging to the VantagePoint long predicted, with a life preserver, to say the least. 99.64. We're up in this verified resistance zone. Zone 1, 2, and 3 are up here, all the way up to 1.0075. Shorts clearly carry the edge here. Neural index turning down. Once again, we see our RSI is capping out and pointing down. Medium term crossing the long predicted difference. The probability that this pair is getting ready for a bigger move down in the coming days and weeks ahead is very, very high. Now, when we look at pound dollar, once again here, guys, we're coming into our zone number 2. Zone number 2 and zone number 3 are premium long entry points in my respectful opinion. Once again, medium term crossing the long predicted. We just need a couple of days with the neural index up, and that should give us the green light. Now, our upside is clearly, as we can see, is being contained by the VantagePoint long predicted crossover, or in this case, just the long predicted moving average. That area, 129.09, we're closing at 128.24. I can say with a degree of certainty, looking at these charts, that we will retrace back to that blue line sooner rather than later. The problem with this pair right now is Brexit. So with my own direct clients, I tell them to just kind of take a step back from this pair right now until this Brexit is resolved once and for all. Now, as we look at dollar yen next week, we're likely to see another choppy week with dollar yen. But once again here, guys, we've got the blue line, the long predicted. It's unable to continue to close above this blue line. It starts closing below it. Equity sell off, down we go. I do anticipate the dollar yen to remain under pressure, but the dollar yen is very, very choppy prior to the non-farm, pre and post non-farm payroll. So be careful of this pair this week. I'm not anticipating a big move, but as you can see by the VantagePoint indicators, medium term crossing the long predicted, so that's two trends against each other. The medium term against the long term trend is weakening. We've got our neural index down, and we're closing below this critical pivot at 112.38. So to start the week, 112.38, we're going to see if we can continue to hold below this particular level. Now, on the commodity side here, guys, if the oil prices rise and gold prices continue to pressure the upside resistance, then USCAD could see a reversal as we move into zone number 2. Now, zone number 1 and zone number 2, they start at 131.30, and zone 2 is going up to this particular level up at 132.36. That currently represents a sell zone for us. Now, the reason I say that, we've got a hawkish Bank of Canada. Commodities are starting to turn around. These are all positives for the CAD, the Aussie, the New Zealand. So right now, keep an eye on those key levels here. We can see we've had a failure on the RSI at the 40 level, so we don't have downward momentum now, but we're not getting above our 60 level either. So the RSI, be careful of this pair, guys. What I'll say is what I've said many weeks before. Monday trading is not your friend. Monday is fake price. Tuesday, the real price shows itself. So for US Canada to go lower, they first have to run your stops and push it higher first. So expect to move higher on Monday, potentially with a violent reversal on Tuesday, Wednesday, Thursday. I can't even tell you how many times I've seen this with this pair, guys. So be very cautious of Monday trading on all of your Forex pairs. Watch and wait. Start looking to enter positions probably mid to late day Monday, but more importantly, Tuesday we're going to get our real price. So as I've said with commodities, if gold can recover, then the Aussie will move higher, will likely move higher with it. Right now, we're in this lower first and seconds, and the third zone on this particular pair is down here around 69.50. I'm not anticipating a test of that area unless equities violently collapse. And again, I think that they should start to recover a little bit next week. We'll wait and see. But right now, we are trapped on the Aussie. We must get this 70.78 level. We've managed to close above it. That in itself is somewhat of a bullish signal here, but we need to close above that level a couple of days in a row. Same as New Zealand, US. New Zealand under pressure here, that critical level, 65.32, the long predicted. But you can see that we're still looking at further bearish, some bearishness to continue. But if by Tuesday we retake 65.32 and we're closing above 65.32 by Monday, midday Tuesday, then that's going to give us also the green light to go long. I don't anticipate Aussie US, New Zealand US to recover until after the non-farm payroll, but I do think they will remain firm. So we have a tricky week ahead, but I do like weeks with the non-farm payroll number because in most cases the markets are contained and controlled and there aren't any violent moves, at least until Wednesday after that ADP report. So with that said, this is the Forex Weekly Outlook for the week of October the 29th, 2008.